Hello and welcome. Today, we'll be diving into the current situation surrounding the Japanese yen, its economic impact, and the global factors influencing its movement. The Japanese yen has recently fell to a 5-week low, hitting 148 per dollar due to the strengthening of the US dollar as a safe haven asset amid rising tensions in the Middle East. However, it has since recovered, bouncing back to 145 per dollar on Tuesday following a ceasefire agreement between Israel and Iran. On the domestic front, Japan's manufacturing sector returned to growth in June, marking the first expansion in over a year, whereas services activity also expanded for the third consecutive month, signaling resilience in the economy. However, a weak yen remains a significant concern for Japanese policymakers. Rising crude oil prices have worsened Japan's trade balance as the country imports almost all of its oil. This has accelerated inflation by pushing up import costs, adding pressure on the economy. Japan's foreign exchange policy currently is in spotlight, especially with the reappointment of Atsushi Mimura as the top currency diplomat. A weaker yen usually supports Japanese equities by increasing the value of overseas revenue for exporters. However, the effect may be short-lived due to rising energy prices and inflationary pressures, which are expected to impact the government's approval rating ahead of the upcoming elections. In conclusion, while the Japanese yen has seen some recovery, it remains under pressure from geopolitical tensions and domestic inflation. Keeping an eye on these factors will be crucial for understanding Japan's economic trajectory in the coming months. Thanks for watching. Stay tuned for more such market updates.